everybody. Welcome to the Hawaii Captive Insurance Council Risk Topics Zoomcast. I'm your host, Ward Ching, with Aon Strategic Solutions and Innovation Practice and the USC Marshall School of Business. Today's topic is on the critical issue of cyber. Everybody's got that problem. Everybody's dealing with it from a pricing standpoint, capacity standpoint. What do you do? In specific industries, it's extremely difficult. Today, though, we have two individuals that have really been thinking deeply about this and have some interesting things to talk about. So my guests today are Sam Tashima, who is the lead actuary inside of Aon, focused on the issue of digital economy, cyber, digital assets, etc. And we also have Matt Reece, who is the senior executive vice president, CFO, and CAO of WEBCOR, one of the largest construction organizations on the West Coast. And he also has a captive located in Hawaii. So welcome, Matt and Sam, to the podcast.
Thank you, Ward.
Yeah, thank you, Ward.
So let's start, Matt, with a quick background on you. Tell us a little bit about you and what WEBCOR does.
Absolutely. So WEBCOR is a general contractor, as you mentioned, based in California. So we do projects really throughout California primarily. And then we have a captive insurance company, Paramount Insurance, domiciled in Hawaii, that the primary lines of coverage that we push through there are workers' compensation, general liability, and subcontractor default insurance. We will also carry some of the deductible side of some of our other lines of coverage. Cyber is one that we're considering putting into our captive. We have not done so yet. But on some of the other lines of coverage, we've put that in there. And so we are again excited to talk about this topic. It's a challenging topic, I know, for all of us that may face some of the challenges and risks that I know Sam will talk about today.
I think the last time you and I saw each other, we were in a hotel room doing an HCIC presentation in San Francisco. And when we looked out the window, all the cranes in San Francisco moving about were your cranes. They were all WEBCOR cranes.
We strategically positioned them that day, Ward, so that they would be visible from that window. So
and they were all moving in the same direction at the same time. That was just absolutely wonderful. So thank you. Sam, tell us a little bit about yourself.
Thanks, Ward. So I'm a director and actuary, part of Aon's cyber risk consulting team. And essentially, I lead our cyber risk consulting group along the cyber quantification, technology, and E&O quantification work for North American operations. My background, say, trained as an actuary, dealt with core risks such as workers' compensation, auto liability, products liability. But ever since really 2016, have had a heavy focus within cyber risks, broader digital assets and other components. And really within my role, it's helping organizations understand if a cyber technology incident were to happen to them, what is that financial impact to the organization, and translating that into understanding limit adequacy from the commercial market insurance purchase, or I'm the opining actuary on quite a few different captives and dealing with captive feasibility studies. So the pricing and reserving around cyber technology, E&O, cryptocurrency crime, et cetera, and how those play within captives and alternative risk vehicles.
Yeah, and you and I have done a lot of work in the cyberspace, but also in the cryptocurrency space. In both arenas, the difficult problem is data, right? How do we put data together? How do we see it? How do we price it, et cetera? Well, thank you both for being on the panel. What we're going to be talking about first is, what does the market look like? What's happening in the market? And Sam, thank you for putting together a series of slides. I'm going to share my screen. And let's talk through what we see. So by now the screen should be up, and the first really is the U.S. cyber loss ratio changes. This is an NAIC filed loss ratios. Sam, talk about this for a minute.
So I think the interesting thing, these loss ratio figures are taken from the NAIC filings. So it's a direct written premium associated with US domestic carriers. So one of the components is that there are certain Bermuda, London markets not included within this data set. But it still tells us an overall story about how, as we look back at 2017, 2018, 2019, this was a very profitable market. And we started to see in 2020, followed by 2021, loss ratios deteriorate significantly compared to where they were. A lot of that was born from ransomware and those aspects. However, an interesting thing to note as we look at the 2021 figures, so in 2019, the total loss ratios increased from close to 45% up to 67%, but then they basically stayed static in 2021, right around 65.5% loss ratio. But in 2021, as numerous companies are aware of, they saw significant rate increase, premium increases that really stretched the budget. And it's interesting to note that while our clients and broader customers were seeing those rate increases, the loss ratios stayed basically static, which means that the carriers were seeing quite a bit of loss activity themselves.
Yeah. So Matt, what does this data tell you? I mean, what happened in your renewal experience on the cyber side?
Yeah, I mean, and I'll certainly touch on that, Ward, but I thought I would touch just on kind of where we are in terms of our security posture from technology that underlies this, and how does that relate to what we're seeing here in the losses increasing. You know, we've been fortunate at WEBCOR, and I should knock on something. I don't know what I have wood here in this office, but that we have not been subject to a loss, a cyber-related loss yet. But our senior director of security that works with me at WEBCOR on the technology side has now phrased it as he's preparing us for not if it happens, but when it happens. It's no longer become I can prevent through firewalls and other security measures and everything else that I can prevent this from happening. He is now translated or migrated to the perspective that no, we need to prepare for when this does happen, and how can we mitigate that and minimize that loss through other measures, knowing that we will be breached at some point. So it's almost inevitable with the level of state-sponsored attacks and other things that are occurring in the marketplace. And so we're relatively new to the cyber insurance market, right? In Sam's chart here, I don't think we put the coverage in right about 2017, was when we first started considering this as a line of coverage, and have certainly seen premiums ratchet up as these losses have become more real and more widespread. And I participate in our industry, in the construction industry, in a CFO forum, and some of the horror stories that we've had at our CFO forum meetings are scary. In terms of ransomware and network interruption and how it can get locked down for a period of time. And so those have been interesting to hear.
Yeah, no, all of that's really interesting. And this next slide really talks about incident rates over a period of time. And it's interesting to see how there's been a transformation from the breach arena to the ransomware arena. And that's been a big deal for the insurance industry, because breach is one thing, and you can actually create hygiene around breach, right? You can create defenses around it, and yes, you're not always going to be there to catch all the bad guys, but you can do a lot of mitigation around that. In the case of ransomware, real different story. So Sam, talk to us a little bit about what you've seen over the last 13 quarters here.
Sure. And these rates, these are based on frequency rates from publicly reported information, and it's pegging everything back to Q1 2019. As we saw in the prior slide, there was a lot of loss ratio deterioration. Started to see it in 19, and then 20 and 21 was really the years in which those loss ratios came in the worst. Predominantly was driven by the ransomware, the spike in ransomware activity that we saw over that time period. You can see how it's just a straight line up basically between Q1 2019 through Q4 2021. Yeah. Now, an interesting aspect as we look at the right-hand side of this chart is while data breach experience or non-ransomware data breach experience has been fairly flat, the red bar, the ransomware, has actually started to tick down a bit in the most recent few quarters. And that's not something that's just seen from our end in terms of the macroeconomic environment. Beasley reported its earnings a couple of weeks ago. They were very explicit in the sense that they've started to see this ransomware claims frequency decrease. There are numerous questions around that. Is it due to some of the broader geopolitical items, or certain bad actor groups related to Russia more focused on Ukraine as opposed to the current environment? Regardless of that item, it's an interesting aspect that what we're seeing from that macroeconomic environment is also being seen on the carrier side, especially over the course of the past few quarters.
Yeah, I mean, I think there's been a significant focus in the healthcare space, and there's certainly in the public sector space. Matt, when you've had your CFO roundtables, are your colleagues talking about ransomware as well?
I mean, absolutely. In our industry, construction, to be honest, we don't worry about privacy and data breach maybe as much. I mean, certainly we have employee information that we would not want to be, shared. We have some, information from clients that might, we would not, but we don't have credit card numbers or health information on patients and different things like that. But the ability for us to be shut down is what kind of keeps me up at night. And some of the horror stories I've heard where we cannot get our network back operational and be able to utilize that. And certainly we have workarounds like many would, but it's not ideal, right? We've become data driven. And so in the end of the day, so much is contained within the system. And so, this idea of having to pay a ransom in order to get your network unlocked is something we think about for sure.
Yeah, in some industries or some verticals, it can be mission critical. For example, in the healthcare space, we now have a couple of cases where a ransomware attack on a major hospital occurred, shutting down the hospital when it was in full operation with ERs full. Essentially shutting down everything that was necessary to keep patients alive. We've had patients die as a result of ransomware. Now that becomes a very interesting legal question around, is it hospital professional liability? Is it ransomware cyber? Is it something else? So it's going to get sorted out. But that we've seen people physically hurt as a result of this. The second thing that's happening, and I think, Sam, you could comment on this too, is that the way that the bad guys are asking for their ransom is a bit more like commerce now. So they're not asking for millions and millions of dollars. They're asking for something that kind of lives inside your budget. And they're almost treating you as if you were a commercial customer and providing you with payment terms and with ways to make your payment without much muss and fuss. So it's this business of ransomware seems to be transforming as well. Have you seen that too, Sam?
Well, we have, and it's been really around the commercialization of the ransomware as a service, where it's not just a single group where, oh, we're the group and we create the malware and we find the targets and then we go after them and put the malware on their systems. It's much more of almost the decoupling of the components, where you have a certain group that will create the ransomware, then they'll receive royalties essentially in terms of farming it out to different groups, and then those groups will hire companies or hire other bad actors to say, oh, who should we target? And it's just a very more creating efficiencies as part of it. And I will note that we have seen instances in the public domain where a certain group was attacked and the bad actors said, oh, we would like to receive $500,000 equivalent Bitcoin. And we know, because you may be a small business, say a rural area, but we know that you have $500,000 worth of cyber insurance, and that's why we're targeting those amounts. So there's definitely a savviness that has, or maturity that's happened within that broader industry.
So perhaps not to coin a phrase, but you're suggesting that there might be a ransomware supply chain out there?
Yes.
That sounds bad, doesn't it, Matt?
I have heard stories of customer service hotlines where good afternoon, how can I help you? Please enjoy your day. It's that sophisticated. It's not that, you've been through some back channel on the dark web. I mean, this is just literally a 1-800 number that you're instructed to call and someone helps you. But I did want to add in this regard too, some pieces of advice that we've received, and we're actually going to proceed with this now, and certainly would be interested in Sam's perspective on this in terms of risk management as well as yours, Ward. But one of the pieces of advice we've been given is to actually one of the things that cyber insurance provides you is access to specialists and experts that will help you in the instance of an attack. And so one of the things we're doing now is we're actually meeting those individuals, even though we have not been attacked, and understanding who are they, how can they help us, and then we're actually going to go through a practice attack that not only involves the technology group, but involves members of senior management, something you might do in like a drill for safety or something. But in this case, acting like we've had a ransomware attack, what and how are we going to react to that? Because one of the things we wanted to be careful of, and some of the advice we were given, is to not wait until it happens and then I'm meeting Sam, for the first time. Say he was our advisor here, and I don't have a relationship there, and we're trying to figure each other out as we go through that. So I'm interested kind of in your perspectives on that as well. But that's some advice we've been given as to how to address this.
Yeah, Sam, you and I are in those conversations all the time. You go first.
Well, I'd say it's very common, and oftentimes as we're going through much of the quantification with organizations, we're having that broader discussion around when you're reporting to the audit committee or the risk committee on the board of directors, what are you telling them in terms of these are the top cyber scenarios that we're concerned about? And taking that enterprise risk management discussion to a broader, if this happens, how are you responding? Like, what is that commercial impact? And for the sophisticated organizations, they're able to talk through, here's what our game plan is. Like, we realize it's a top risk. We've communicated that to the board of directors, but we also have a game plan around it because we know that, Matt, back to your commentary from your internal leadership, it's a not if, but when. And so we have to have a plan. Now, when the attack happens, is everything going to go according to plan? No, but at least you've thought it through, and there's some thought process around who are the appropriate contacts, how do we need to be liaisoning such that it's a better coordinated effort.
Yeah, we're seeing this conversation, Matt, and the same thing you're seeing around business continuity planning, and do what we refer to as bug bounty. In other words, find people to try to get into your system and pay them to try. And secondly, practice. Do a desktop examination where you have something that's attacking the system. You get your people together, you respond to it. It's like doing fire drills. You do fire drills for a reason. So you know how to get out of buildings, you know where to assemble, you know how to be safe. Same thing here. It means practicing. And it doesn't mean just do it once every 3-4 years. It's like do it maybe once a quarter, because things change in the cyber environment. So getting back to the slides, though, this is the year-over-year cyber incident rates by quarter. So this reinforces, Sam, what you've been talking about in terms of the flip over.
Exactly, and it won't spend a lot of time on this chart, but in terms of reading it, so that Q1 2020 number, that 254%, what that means is compared to Q1 2019, frequency rates associated with ransomware were up 254%. Now, looking at the right-hand side of the chart, in Q2 2022, ransomware frequency was actually down by 47% relative to Q2 2021. Note for the most recent 3 quarters from Q4 2021 to present, ransomware year over year for the given quarter has actually been down. So it's going to be an interesting component as we continue tracking to see, one, how does this impact, or these trends continue? But then two, how is that going to impact the corresponding loss ratio and experience from the market? Because hopefully we're sitting in a situation where the rate pressures start to decrease, potentially higher competition and better profitability in the industry. And we've started to see that a little bit from certain carriers as they've reported their earnings, especially through the first half of 2022.
Yeah, no, that's very interesting. So Matt, despite the data, you're now looking at the question of putting some or part of your cyber program into your captive. What's the thought process behind that?
I think we're still learning, Ward, in terms of one of the things that I would advise individuals looking at this, and provide myself the same advice, and we went through that with our broker this year as well, is cyber coverage is complicated, right? It's not, it comes with a sheet of different sublimits of coverage for things like cyber crime and invoice manipulation and actual damage where you actually have some sort of injury damage that occurs, business interruption, which is very, I think in thinking about that, what does that mean to us in terms of, and so then what type of a deductible are we willing to carry? There's deductibles that have things to do with time, where that maybe there's a 12-hour deductible before it kicks in, before you get business interruption. And in our case, as a construction company, business interruption is very difficult to define sometimes. So I think we're still learning. You mentioned we'll have for the first time in a few years, we're going to have the Hawaii Captive Insurance Conference. I'm actually interested to talk to some other captive owners and see how they're utilizing their captive to find some gaps in the third-party market that our captive can potentially cover for us, and we can build into the premiums that we push out to all of our projects for cyber coverage in the end.
I think there's going to be a great discussion around cyber at the conference, and we're going to be asking questions about pricing. We're going to be asking questions about capacity. How does the captive potentially play in that context? What are the consequences from a capital standpoint with respect to the captive? So I think there's going to be a lively discussion out there about this issue.
The other piece, I was just going to say, with regard to the captive considerations is, and Ward, I know that you know this as well, given some of the projects we've worked on together, but just the overall increase of interest over the course of the past 12, 15 months. That's not to say that organizations weren't putting in, some have had cyber and broader technology E&O within their captive for numerous years. But as we looked at the market conditions and the rate increases, companies were being pushed to higher SIRs, and very common to say, well, we're already funneling workers' compensation and auto liability through our captive. Why not add cyber as another aspect, whether it's that first SIR component or leveraging it more strategically as they look up the tower and say, oh, we're having difficulty in filling out all of our third excess, or there's a quota share consideration. It's a perfect opportunity for the captive to participate as part of that cyber and E&O program.
In light of that, I mean, this next slide really points to some of the pricing issues. I still see this as bouncing around, but certainly the pricing as of June 22 versus December 21 are dramatic. Is there anything else you've been seeing, Sam, in the pricing space or in the capacity space out there?
I'd say from a broader aspect, as we look at this, throughout 2021, and even as we got into Q4 and even Q1 of 2022, those pricing increases were dramatic for numerous different organizations. It's nice to see a bit of some stability, and you could still look at June of 2021 and say, well, gee, the 61% pricing increase, like that's still significant.
It's still pretty big. It's still pretty big.
But it's less so than it was previously, which is great. And we're starting to see some lessening there, which helps out our clients. And the other aspect that's coming in is there's competition. At times, certain programs have had, say, they've been oversubscribed when looking for broader capacity in the marketplace. And now, at a broader aspect, what we're hoping to see as that consistent improving around the capacity and limit and stability around pricing, that those trends continue throughout 2022, and our clients are able to get back to a more strategic conversation around what do we think around limit adequacy, program structure versus having to take it on the chin. That doesn't mean that the underwriting process isn't still rigorous and that there are still issues for certain industries and verticals, but we're starting to see some benefits coming to the policyholders that weren't there over the prior 12 months.
So Matt, as the buyer, are you getting the same message from the market and your broker?
Yeah, generally so. Yeah, that there is a bit of stabilization. That I think this chart tends to show that it's still going up, but maybe not quite. I think the market is getting, again, this is somewhat relatively new coverage, in the general broader sense of insurance, right? Where that some coverages have been around for, dating back to Lloyd's of London days for hundreds upon hundreds of years. This is newer in that regard. And I think the insurers are still feeling it out too and trying to understand how it all comes together. But so we have seen some stabilization in our renewal that we just completed at the end of last year, but certainly an increase.
Yeah, no question about it. All right, so what I want to do is shift gears a little bit. Sam, you participated in the American Academy of Actuaries development of a new cyber risk toolkit. In just a couple of minutes, because we're just about ready to wrap up this session, what is this toolkit and how does it help people like Matt as he encounters and thinks about his cyber program going into next year, even the possibilities of putting it in a captive?
So as part of I'm a member of the American Academy of Actuaries, and we have one of the key components is volunteering, making sure that we're getting spreading our knowledge accordingly. And within the Cyber Risk Task Force, we're very much looking to benefit and share that knowledge with not only the actuarial profession, but others who are just looking to understand and quantify cyber risk within the general public. We've been involved in public policy outreach, such as letters to the Department of Treasury and the Government Accountability Office. And one of the key pieces that we came in to was putting together this cyber risk toolkit. And it was a process to look at critical topics around data. What is cyber insurance, risk accumulation, ransomware, war and cyber terrorism, which is a key piece that I was heavily involved in authoring. And this document, it's meant to be a toolkit, just a resource for general practitioners or anybody interested in learning about cyber. And there are key sections that you can jump to, but it's also a living document because we know that at any given time, there are portions of it that are going to be needed to be updated and refreshed over time. But with each section, there's always a timestamp in terms of when was the last time this was updated, but very much a living document where we're continually adding to it to help the knowledge base of the broader industry as a whole.
So how does somebody get a hold of this toolkit?
The best way to access it is via this American Academy of Actuaries, the broad website. There's a subsection for the Cyber Risk Task Force, and in that, we have a couple of links here that we can include within the show notes, as well as it'll be prominently displayed under the subtask for the Cyber Risk Task Force, as well as if you're curious in terms of any of the letters we put together for the Treasury Secretary or the Treasury Department as a whole. So
clearly bedtime reading, right?
Definitely.
Yeah, Matt, you're gonna pull this down and have it at the bedside right away.
I'm already ready to download it. I'm interested now, so yeah, for sure.
Sounds great. Well, listen, thank you very much, Matt and Sam, for a really interesting discussion around cyber, looking at the issues from several different points of view, and your commentary around the market is just terrific. So thank you very much for being on the session. For all of you in the audience, please be sure to join us at the upcoming Hawaii Captive Insurance Council Forum. That'll be in October in Honolulu. Again, lots of great panels, lots of interesting conversations, and Matt will definitely be there. So if you want to talk to Matt about construction, you want to talk to him about his captive and what he's thinking about, he'll be there.
I will be
So
on one of those panels you mentioned, Ward. So
you will. Yep. I'm actually doing a panel on cyber. So see you there. So with that, thank you very much, everybody, and we look forward to seeing you soon.
thank you.
Thank you.